What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a strong bounce across the board in the indices and we are starting to come into some very critical resistance. Was this just a lower high before we continue in this strong downtrend, or are the bulls finally back and they're getting ready to break through resistance? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 2.39% and we did get a very strong bounce off of the lows, but we are still in a very strong downtrend. So I do want to continue to remind you that this is a downtrend until it's not, and you still need to be very cautious even after green days. So there will be a lot of price action we need to watch very closely going into next week, and the first thing I want you to pay attention to is the fact that we did close back over the 5 EMA. So when you look at the 5 EMA, the last time we closed above that level, we did see a very strong sell-off, and then we did get another short squeezing rally which closed back over the 5 EMA and the 13 EMA. We came back into that resistance zone and saw another very strong sell-off, and we're now back above the 5 EMA yet again while butting our head into resistance. So you cannot just see one green day and start to get bullish. We need to see some type of bullish follow through, and we need to start putting in higher lows as well. So what we're going to be looking for to start getting bullish is start coming in here and getting some follow through with the price action, put in that higher low, see a bounce off support and come back up and take out the previous high, and then we will start seeing some type of bullish development. Remember, this is a very strong bear trend and this is very weak price action as we continue to make lower lows and lower highs. So you need to be very cautious if you are getting overly bullish. This is not the time to be doing so. Now remember, as a bullish contrarian, this could be a great time to be loading up long positions, but you need to remember that a long position is something you don't mind holding as an investment for over a year. So there's a big difference between the mindset of a trader and the mindset of an investor. So if you are an investor, these are obviously great levels to start nibbling and accumulating at, but as a trader coming into resistance, you need to be getting very cautious. So in SPY, we'll be getting a lot more bullish if we can start breaking back above about 405 and then getting back above 420. Anything between 405 and 420 could easily just be a lower high before we continue to go lower. So the most critical support I want you to continue to watch is down here right around 393 to 390. If we start breaking below 390, that is going to severely increase the probability that we could see capitulation, which means we will likely see SPY at least coming down to about 370. So SPY 390 is going to be your risk level or your line in the sand to start staying bullish, because if we start breaking below 390, there's not a lot of reasons to be bullish as a trader. Below 390, you're looking for the chance of capitulation to significantly increase, and above 405, you can start getting more bullish in the short term for a retest of about 420 or the 20 simple moving average right around 418. Above 420, we still have very critical resistance at 428, and above 428, we still have the bears waiting up there right around the 430s, but we will be getting a lot more bullish if the bulls can break back over this 20 simple moving average. Remember, the bulls are going against a very strong downtrend, so right now they're just trying to get some type of bullish price action that will attract buyers back into this market, and that is not going to be easy to do, and it is going to happen in stages, and you are going to see the developments. So please do not be getting FOMO just because we had one green day. Even though this is the first step of what the bulls needed to do, we need to see some type of confirmation and we need to start seeing some follow through. Also notice on the volume, we did not see very high volume buying, and coming off of a very critical market bottom, usually you will start seeing some high volume buying. So we don't have any confirmation with volume that we are near the bottom or have actually hit the bottom. Jumping over to the NASDAQ 100 triple Qs, we were up 3.71% today, and again it's the same exact story as SPY, where it's just one bounce off of the lows and we cannot be getting bullish. This is without a doubt a very strong bounce, and it's exactly what the bulls need as a step one, but we need to see follow through and we need to start closing back above 305 and then getting back above 318. Back above 318, the bulls will be getting a lot more strength and they will start having the possibility to make a higher low and a higher high, but we don't know it's going to happen, so we need to follow price action. Just like SPY, we did not see high volume buying, so there is no strong conviction coming off of these lows that a bottom is in, Because like I said with SPY, you are going to see high volume buying when we actually hit the bottom. So more than likely, we could come back down to at least retest the low right around 285. And if we break that level, you're looking for strong support right around 276.8. If we start breaking back above 318, we still have very strong resistance right around the 330s. And we will be getting a lot more bullish if the triple Qs can break above the 330 zone. So there is a ton of resistance to the upside, and there is still a very strong downtrend. And for all we know, this was just a dead cat bounce as shorts are getting squeezed out of their positions for getting a little too ambitious. So going into next week, you still need to be very cautious of more downside as we come into the strong resistance zone, because as you can tell across the market, we did not see any strength with the bulls today, even though we did see an impulsive bounce. You are going to see very impulsive bounces in every single bear market. We know the Nasdaq 100 is in a bear market, but we know the S&P 500 is also very close to a bear market. So we are going to know by next week if this was just a dead cat bounce before capitulation, or if this is going to be the real deal bull rally and we're going to get a severe counter trend rally that could take us to much higher prices. In the Dow Jones, we were up 1.45%, and the Dow Jones is getting that oversold dead cat bounce on very low volume, and it slammed right into resistance right there at 322.6, which is exactly where we expected resistance to be. You can tell from the arrow that I do have downside price targets taking us down to 310.5, which means we are more than likely going to get rejected at one of these resistance levels, form a lower high, and then come back down and form another lower low. So you're looking for rejection at this resistance level that we're currently at, or going up for the next leg higher at 326 or 333, and we can still get rejected from any of those levels and still put in a lower high and still come back down here and put in this lower low at our price target at 310. If we break below 310, we have strong support at 308. So right now with the strong downtrend, you should be expecting lower prices until we get a bullish breakout with the price action. It's a downtrend until it's not. Slam that into your mind so you do not forget that this is a strong downtrend until we see some type of bullish breakout. On the Russell 2000 IWM ETF, we were up 3.17%, and we came right back up to that resistance zone right around 178, and we are seeing a little bit of a wick above that level, so we are seeing sellers at resistance. We did close back above the 5 EMA, and the next resistance is at 183, and at the 20 simple moving average at 187. We're getting a lot more bullish if we can start breaking above the high 190s, but we need to remember this is a strong bear market and we still have a downside price target at 165.7, which will close the gap. And if we continue to go lower, we have the price target down there at 156. There's no way this looks like we for sure bottom, so you need to be continuing to expect lower highs and lower lows until we break out of this downtrend. On the Arkk ETF, we were up 11.82% today, and I did go over this in great detail in last night's episode of exactly why you should have expected this to happen. If you did not watch the Arkk portion of last night's video, I do suggest you go watch that now because I am not going to repeat what I went over last night. But you should have been expecting this strong bounce, and I gave all of the reasons why in last night's episode, so I'm not going to go back over those reasons. But in short, this is not something that is bullish. This is more than likely just an epic short squeeze rally that you should have seen coming, and it is more than likely not going to lead to a bull market. So from here, you are still looking for resistance at 47 and 52, and if we start breaking above 52 and 55, then it will be looking more bullish. So yes, I know it's weird to say that it is not bullish to go up nearly 12% in one day, but there is a big difference between expecting price action to go higher and the price action actually being a bullish development. We expected the price action to go higher, and we did get very impulsive price action today, but this is not something that you want to be buying into and not something you want to be investing in. This is an extremely strong bear market, and we still have a downside price target at 33.7. So once this short squeeze rally is finally over, I do expect to see it roll over and come down and hit our price target. So watch that resistance zone, and if we do start to roll over, we are more than likely going to see continuation of the selling as we come down and reach lower price targets. Right now, you need to watch this gap fill level right around $40, which will also be the support. On the VIX, we were down over 9% today, and we did see the VIX getting crushed back down below 30, but it's only one day and we need to see follow through. From what I can tell on this chart is we still have a bull trend and we're still sitting right on top of support with a positively sloping 20 simple moving average. So there is nothing that says the VIX cannot spike right back from this level and still reach our price target at 38. I do not think with the price action that it looks like the bottom is in. So there is a good possibility that the VIX is going to spike and we are going to see the VIX back into the 30s. And I do think it is highly likely that it's going to be as soon as next week. Doesn't guarantee it has to happen next week, but you still need to be very cautious. But if we do continue to see the VIX getting crushed, we will become more bullish. The next bullish development for the VIX will be closing back down below 24. But like I continue to warn you, this does not look like the bottom is in yet, and I do expect to see the VIX spiking yet again. On Bitcoin, we're currently up about 3%, and Bitcoin did exactly what I wanted to see with this huge lower wick below support. Remember, this is a very common theme in the crypto market to go below support and get these mini flash crashes to scare out all of the longs. And that is going to lead to a great buying opportunity. You can quote me on this because I guarantee you're going to see it happen. Is there is going to be some newsline article that comes out and told you exactly who the big shot was that bought this dip, and that is instantly going to send Bitcoin into a mini bull rally. So right now, I think this is risk on for Bitcoin as long as it's above 28,000, and there is going to be a lot of buyers in this zone, which is taking us all the way down to about 25,000. So at this point, I think Bitcoin going down to $20,000 is delayed for the longer term. And I do think Bitcoin will make a stand around this zone and more than likely start going into a mini bull rally in the very near future. That mini bull rally should be expected to take us back up to 37,000 and at least retest resistance right around 40,000. And we'll be getting a lot more bullish if we do get confirmation of the bullish breakout. So for the time being, this is a bullish time to accumulate. And just remember, there's still the possibility later in the year we come down to 20K. So you should save dry powder in the event we go that low. You will be able to accumulate more to your position. Remember, I'm speaking as a bullish contrarian. If you're bullish on Bitcoin in the long term, you want to start considering accumulating at these levels, knowing that it could go lower, but you would only want to buy more. On NVIDIA stock, we were up 9.5% today, and we came back up to that resistance at 179, and we did not close above that level. So I continue to warn you that a lot of these bounces in the market today did not prove that we hit the bottom, and we still have this downside price target at 150, and I do think it's possible we hit that price target before NVIDIA reports earnings. So at this point, you're not getting bullish until we get back above 210, but if we do break above 179, you still have resistance at 184 and 199, with the downside price target at 150 with possible support on the way there right around 160. It's a downtrend until it's not, so try not to get bullish on NVIDIA until we can at least start breaking back above 210. On Tesla stock, we were up 5.71% today as we see Tesla getting back over 762, but failing to break back above the 5 EMA. If we can hold 762 as support, we could go to the next resistance zone higher, which is at 828, 856, and 900. We can't get bullish until we get back above 900, and if we lose this previous low of support at 700, you're looking for the next downside price target at 620. We have a bear trend and we have bearish price action, so it's a downtrend until it's not, so expect to see a retest of 700 and possibly break through it and get to the next price target at 620. On Apple stock, we were up 3.19%, and Apple did get up to that resistance zone right around 148, but failed to close above it, and we still have bearish price action with the strong bear trend, and we do have a downside price target to fill the gap right around 137. So as I continue to tell you, a lot of these bounces could just be dead cat bounces because we were way too oversold, and Apple was way below the lower Bollinger Band. It is more than likely we are going to put in a lower high somewhere around 148, 150 or 156, and then roll over and finish out the stock market correction by hitting these downside price targets. There's no guarantee we can't go lower than the price targets I'm giving you, but these are great levels to consider buying at if you are bullish in the long term. If Apple does start breaking back above 156 and right around 162, then we can instantly start getting a lot more bullish, but this is a downtrend until it's not, so continue to expect lower prices. In the financial sector, we were up 1.45%, and we still have bearish price action with a strong bear trend. So as I continue to tell you, there is nothing that tells us we need to be bullish at this time. On the industrial sector, we were up 1.27%, and we still have bearish price action with a bear trend. So I continue to warn you, the industrials could be heading lower. The healthcare sector was up 1.06%, closing back above the 5 EMA, but we still do have a bear trend. If we can get back over the 50 EMA, that will be bullish price action, but we still have to respect the strong downtrend. The energy sector was up 3.42% today, coming up to previous resistance, and we did regain the bull trend, so the energy sector could be trying to go higher from here. So jumping back over to the S&P 500, you have to remember this is a very strong downtrend, so continue to expect lower highs and lower lows, and there is nothing on these charts that tell us we need to be overly bullish. While yes, we did expect this oversold bounce in the short term, we have now started to bounce and there's no guarantee we need to continue to go higher. So make the price action prove everything to you and don't get bullish until the price action shows you some type of bullish breakout. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market that year and had a very positive return. If you're interested in learning more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord community, you can click on the link in the description of the video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.